What is going on, fam? Now, as promised, I did mention about doing a sniper entry video, and here you guys have it. So this is GPUSD. Now you might be saying, Mauricio, that's not a sniper entry. No, this one is not a sniper entry. This is the swing entry that got me into a sniper entry because I was able to analyze before time to later on refine my entry. This was a swing trade in case if I was not to wake up, but luckily the market came into my alert during the time that I like to trade, which is New York session, and I was able to capitalize with this risk reward. Now my final TP on this trade right here is going to be a 1 to 52, meaning that we still got some more leeway, but as you guys can see, we have come up into a 1 to 41 risk reward, meaning that for every 1%, you could potentially gain a 41% gain, right? For every 1% that you risk, you could potentially gain a 41% gain. Now, let me explain to you how it is that I got this sniper entry. Now, just letting you guys know in advance, it might take 2 to 3 videos because I only get a limit of 5 minutes for these ones. Just that way it can be interactive and you guys can be able to see this more in depth and see it over and over and not get tired, okay? So let's get started. GPUSD, I first started off from a swing perspective to want to analyze what is going on and why the market is moving from a certain area. As you guys can see on the 4-hour time frame, one of the things that I was able to identify was the fact that market was already creating divergence, right? Market was creating divergence, and that's something that called my attention due to the fact that I was able to understand that market could potentially shift to downside. Now, not just that, but another thing is the fact that we are entering a potential distribution phase. Now, if you ask yourself, what's a distribution phase? That is when the market is wanting to start moving to the downside, right? When it's starting to distribute its numbers, to distribute its liquidity, so on and so on. So therefore, market is going to tend to push down. Before it does push down, market will do a break of direction. What is a break of direction? A break of direction where the market has broken 2 structural levels. And as you guys can see, market has broken 2 structural levels. Market has broken 1 and 2 in one push, okay? That's very, very important. Market has broken 2 structural levels in one push. Therefore, that is considered a break of direction. Now, when market does this, I want to go more in depth, right? I want to be able to understand why market did that and where can market potentially come up into. Now, on this case scenario, one of the things that I was able to identify was due to the fact that on the daily time frame, I saw price action, and this is very, very important. The price action that I saw on the daily time frame was hanging man. This right here is a hanging man. Now, if you go in depth with price action, a hanging man, the way that it reacts is due to the fact that if you measure from top to bottom from the wick, your first TP, okay, is usually going to be the mid level. So in this case, this would have been the first TP. Second TP would usually be the bottom of that wick. Now understand that there's going to be a retracement, and the retracement is where we're going to enter. And we're going to tend to look for the final TP. In this case, what's the final TP? You simply go ahead and measure your hanging man and go ahead and put it right below, like that. So it's ×2. And your final TP is going to be that second move. Okay, so you're going to have first TP, which is going to be the middle, second TP, which is going to be the bottom of that hanging man, and then you do it once again for third TP and final TP, which is going to be the end of this hanging man, right? The double of that hanging man. Now look at the correlation that this has. The correlation that this has is a very nice accumulation of price over here, so it works out perfectly. Another thing that you would want to pay attention to is quarter theory levels. So in this case, the 1.30500, okay, as you guys can see, this is a quarter theory level. So in my case, I might not hold it all the way down to the 1.30100 due to the fact that I know that the 1.3500 is a very strong level. It's a quarter level for me to be paying attention to, okay? Now that I have the overall perspective, understand of where market can direct itself from a daily perspective, I now know that this is a swing trade. I also know that market has already broken direction on the 8-4 time frame. Therefore, we're waiting for a retracement to go ahead and catch to move down. Now, where's your retracement going to be? Your retracement is going to be more in detail, which is going to be the 1-hour time frame perspective. The 1-hour time frame is going to give you some details for you to go ahead and take as pointers for you to understand where market can retrace into. Now, if we look at it from an institutional standpoint, we're able to understand that there's certain levels in the market which are going to be the areas of imbalance, right? And also areas of accumulation of price. In this case, I was able to identify that there was a accumulation of price right in this zone right here, okay? Right in this zone right here. Now, the reason why I decided to go to half point of the imbalance zone is due to